Hi guys, thanks for tuning in to another episode of Nuggets News, or our monthly crypto mining update with our friend Will from Mining Store. How are you today, Will?
Yeah, good. It's been a bit of a crazy week. Or even month, we were just talking about it before, but always pushing onwards and upwards, mate. So things are going well.
Yeah, absolutely. It's been yield farming after DeFi, and now we've got NFTs and things are going crazy. I think people have forgotten about the mining space a little bit, but there's plenty still going on there. And probably something that I haven't even brought up with you yet is that I think we're going to see things like NFT mining and other interesting components as the ecosystem sort of builds itself out. So we'll have plenty more to cover in future. But we've got an interesting episode today with a few things that are going on in ETH, and everyone's talking about ETH 2 versus GPU mining and how that's all going to play out. So another educational one today.
Yeah,
Anything to
absolutely.
mention before we get into it all?
No, I think you hit the nail on the head. It has actually been a bit quieter for mining this month. Even personally, I've been focusing a lot on looking into yield farming and understand what's going on, and making sure you're not missing opportunities there. So as I said, like this one would be a great educational piece to really break down the differences between yield farming, proof of work mining, and proof of stake. So on that note, may as well jump straight into the first slide.
Yeah, and even I think that term, like I was speaking to someone the other day, and you'll see in the slides here, Will's used mining, and some people will use a term like staking, and then there's some projects that call it staking that I wouldn't call staking. So we'll talk about all that today. We've mentioned the things that we're going to cover in the episode, so I'll jump into that mining versus yield farming slide. And these are things that we have covered broadly before. Most people understand about Bitcoin and all that expensive hardware and power. And do you want to walk us through the difference there between them, Will?
Yeah, absolutely. I mean, so it's good that we have kind of had this progression over the past couple of months and educating the audience on what is proof of work mining, what is proof of stake mining. So in this slide, we can kind of just recap those and now compare it to yield farming. But to recap that, obviously with proof of work, we understand that we've got really high grade hardware. It's expensive hardware. You're paying between 3,500 Australian dollars to $5,000 per piece. And of course, you've got very high electrical costs. But the advantage there is you don't have to have any coin commitment. You don't have to lock up, 32 Ethereum, or you don't have to lock up whatever it is, 20,000 Loki to actually start earning reward from the blockchain. You're a little bit segregated. You don't have to actually have stake in the project to earn from the project. The other side there is obviously the proof of stake side of things, where you don't really need too expensive hardware. You're using servers, from Hetzner, or it might be Volta, usually just hosting services that cost $5 to $10 a month to keep running. But on the downside, you have to commit quite a large amount of coin. As I said, 32 Ethereum is quite a substantial amount. And there are going to be services like Rocket Pool and other services which will allow you to put in smaller amounts and host as a group. But nevertheless, you kind of have to have that commitment. You're locked into the project. And now what we're kind of seeing that, this third alternative type of mining, which was pretty crazy even for me to get my head around at first, but is this what we call yield mining or yield farming. And essentially it comes down to that liquidity. There's these decentralized platforms like Uniswap and Sushi and all these other decentralized platforms. And by just providing liquidity on both sides of an asset, it might be you're providing liquidity to YFI and Ethereum, you can actually earn by just providing liquidity to both sides. And when people are trading that YFI and Ethereum, you can basically get a percentage of the spread, for providing that liquidity. So yeah, then three different types of mining now. That who knows, there could be newer ones coming through, but no doubt you've probably got a couple points to go on the yield farming side, Alex.
Yeah, well, even with the proof of stake, I'd probably put a bit of an asterisk there. I mean, even proof of work, as we know, there's always exceptions and nuances. So there are some things that you can mine that have less expensive hardware or that don't require as much electricity. And there are things in the proof of stake system that don't even need, servers. You can do it on your home laptop or computer, like a very low grade hardware. And some things where you don't really need a coin commitment per se, or a very low one. So someone with even, I think, $10 of certain coins can still stake. Now your rewards will be proportionately lower. And then some of these others like Ethereum who have set that bar. And at the moment that does cost about $10,000 to get 32 ETH. So they have a sort of benchmark, and then projects will come out like Rocket Pool and exchanges that we're seeing at the moment, and they'll allow you to sort of deposit, so you don't really have to get up to that figure. So there's always kind of differences and exceptions, and it's the same with yield farming. So the very high coin commitment or cost of capital, it's kind of saying that at the moment it's a whale's game, and there's a couple of reasons for that. Firstly, it's a proportional thing. So if you've only got $100 of stable coins, you're not going to get a lot of yield. But at the moment, the gas costs are prohibitive. It costs probably $100 to use some of these contracts because they're doing 3 or 4 things. Like even if sending Ethereum or sending some tokens might cost $5 or $10, these contracts are a lot more expensive. So that's kind of where I see that. And as you say, there's newer ones that are coming out. And just this morning, I did a write-up you saw on shield farming. So other projects are saying, well, that's a way to get liquidity and get people over and get volume for things like the decentralized exchanges or the lending protocols that need all that volume. But now you've got someone like Nexus Mutual that's doing the DeFi insurance and coverage, and they're saying, hey, we need more people to do that. So let's give away our token for that. And they're calling it shield farming. So I think we're going to see all sorts of crazy variants. And once again, if we can keep people up to speed with what's going on in episodes like this, it's far easier than just saying, oh, I can't keep up with it. It's all too hard. Yeah.
Yeah, definitely. And I think like something to be aware of, I read through a really interesting article, and it was talking about like there's more DIA or DIA in the ecosystem because of what's happening on Compound than what has actually been released. And
it kind of there's more
DIA. Correct. Yeah, more DIA. And I found that interesting because that's one of the major things that I dislike about the traditional banking system is that you're literally got banks and they're doing this fractional lending, and like now it's kind of happening in the Compound industry, part of this industry as well. I think that could be something to keep your eye on, or something to that I don't want to get out of hand, I reckon.
So what we were saying for people at home, the DAI stablecoin is the biggest, and that's by the Maker system. And they set out to be a decentralized stablecoin compared to Tether or USDC, which is really strictly regulated. Tether's a little bit shady, and we have never had that audit. But what's happened lately is a couple of things. They started accepting other coins as collateral because it used to just be Ethereum that you'd have backing up all the stable coins, and so they were over collateralized. But lately they've started accepting USDC, and that's actually passed Ether this week. And so people are saying, well, we know that the FBI or the SEC can say to the guys that make that stablecoin, hey, freeze that account. And so theoretically, you've kind of got this centralized asset that can be frozen that's backing this other asset. So if they actually froze all the coins, then that thing would no longer be backed the way it's meant to be. But also what Will was saying is that a lot of people are depositing their stable coins to earn their yield, and they get back this variant. So if you deposit into Aave, you get what's called ADAI, and you get these sort of different coins. And when you go to some of these lists, it says that there's 1 million DAI in existence, and then there's 500,000 ADAI. But if you actually look at it and you add them all up, you say, well, hold on, there's more of these variants in all these different systems than there are DAI that exist. But I don't think the problem is the way that people think about, like with the banking system and that. Some of these things are counted twice. And if you think about it, the coin that's locked up, it's kind of always backing that other coin. And some of these programs count things twice. So there's not actually this thing where there's there's more coins in existence and it's going to collapse if there's like a bank run. So it's kind of different, but different risks, I guess. Yeah.
More on the accounting side. Yeah.
Yeah. Anyway, I wanted to clear that up because it is important as well. So China flood update. This all started with our tinfoil hats and that conspiracy theory that the Gorges Dam was cracking, and that sort of turned out to be true. But what have you got for us here, Will?
Yeah, I mean, like overall, it comes back to, I keep getting drawn to the humanitarian side of it more even so than the crypto side. But yeah, it looks like we are coming to the end of the flood season, which is really good news. There's hopefully going to be that release of not so much rainfall coming down and, less pressure on the Three Gorge Dam and the rest of it. But one thing on the update side, recently, about mid-September, they did do a large discharge of water from the dam. And unfortunately, that came through and flooded a lot of the, I'm not going to try to pronounce it, but Yang River region. And that photo down in the bottom right is kind of the aftermath of the effect of, releasing a lot of water from that Three Gorge Dam. So, yeah, it's not a good thing to see. Relating it back to the crypto and mining industry, there was no facilities that we were aware of that were in that kind of area that were largely hit or flooded. But from kind of our network, we have seen a lot of the larger farms actually start moving up north into the Yizhang province. And so that's obviously, a big thing within this industry. We're starting to see, natural disasters or these kind of things really affecting where people are moving their hash rate. There's been a lot of movement in this previous month. Another thing that we saw as well, and one of our overseas facilities were actually, affected by this, is there were some big regional policy changes enforced by the government and regional governments in China. And essentially what they're saying is, with all this disruption and there's less hydroelectricity, they need to prioritize where the electricity is actually being allocated in China. And also, they're not really happy with, these massive mining facilities being given a large amount of power when, there's regional areas that are not getting the power they need. But on top of that, they said in this statement that they're basically looking at the big data industry as more of a priority at the moment. And so they're really focusing in specific South China areas. They're not really allowing for this mining to continue. So one of our facilities actually did have to get restructured as well and to move into more North China because of that. So we always know that, China's big on data as well. And it's, kind of interesting that they've actually put that implementation in place at the moment.
Yeah, that's really interesting because we've spoken about the geopolitics behind mining, whether it's Iran and these data centers and the government wanting their piece of the pie. I think we're going to find out that some governments sooner or later are hoarding some Bitcoin and some central bankers and that type of thing as well.
For sure.
But as you say, data center is the priority at the moment. Maybe if Bitcoin becomes more valuable, the Chinese government decide that Bitcoin is more of a priority. I guess it just all depends. But these Chinese miners that have got a lot of money, they might say, well, maybe we've got to try and sneak out to Hong Kong or go somewhere else, and we can't risk this. And we're already seeing, hash rate disperse compared to a few years ago. So, yeah, never a dull moment. And it's funny that all these, it's tribes on crypto Twitter and those aspects of the space, but then you have things like these politics and rainfall that are affecting Bitcoin.
Yeah, it's crazy. I mean, it's become a massive market, and it's having those effects come through. The last point on there also, and we're going to look more into the Bitcoin network hash rate and the effects that have happened and compare that to price and everything like that, which we do in pretty much most episodes, but is the network hash rate has reached all-time highs. And that's actually largely, I mean, you would think with all this disruption that network hash rate would drop and facilities are turning off, but the S19 Pros have just started to be distributed, which have a hash rate of about 110 terahashes compared to the previous, which was 70 terahashes. So although there is disruption, there are also a whole new influx of new miners coming on the market, which we will tap into more in the later slides.
Okay, fantastic. So yeah, we'll cover these GPUs before we get into those new ASICs. We touched on this last episode as well, but the old cards have seen a big return. 500% increase in the return for GPU mining rigs. All of a sudden they're profitable, and it's funny how something can go from a few dollars to $10 or $12 and everyone chases them again. Lots of GPUs probably gathering dust after the bubble in 2017-18.
Oh, absolutely. You summarized it perfectly. I mean, like me and Cal, co-founder of Mining Store, we got into mining probably around 2015 and, admittedly didn't understand it nearly as much as we do now, but nevertheless, we're making crazy money off these GPUs. And, that kind of built up to that ridiculous hype, and people, NVIDIA, AMD, these companies were out of GPUs during 2017, like massive disruption within the computer and IT industry. And, during those times, we were getting like $30, $40 for these rigs that we had built. And, kind of after the bubble collapse came down to you're getting $1 or $2, and a lot of people were selling off their parts and turning it on. They were collecting dust. And with this, crazy amount of, transactions going on in the Ethereum network lately and massive gas prices, it's actually made these miners almost as profitable as what they had been, probably at the lower points in 2017. So an example there, one of the mining rigs that Mining Store built was their 8 GPU RX 580 build. And these rigs probably, at the high of when gas prices are probably around 300 GWI, we're getting about 10 to 12 US dollars per day. So overall, when we kind of reflected, a lot of our early adopters on the GPU market, they broke even early days, like before the 2017 hype, and still had those miners go through, and they've still had those miners kind of online and offline, but at the moment really chalking it up again. So yeah, it's been interesting to see that happen. There's some statistics on the slide there with the amount increase that we've seen over this period of time. And the other point to make is that I'm not sure, Alex, if you're aware that the RTX 380 is coming out, or is out actually now. And it retailed, there was a massive uproar on the market. It was, the previous 1080 or 2080 graphics card sold at, I think it was about maybe $1,200 or something like that. And they've released this one, which is much more powerful at a lower price at about $800. But of course, there's a huge shortage at the moment. So these are going for about $5,000. But yeah, they're hashing 130 mega hashes, whereas the RX 580 would only be hashing about 20 mega hashes. So, I mean, there is a short-term market there. I don't think it's going to last. We're going to talk about, Ethereum is moving to 2.0, and pretty much 98% of the network hash rate for the Ethash algorithm is on the Ethereum network. But yeah, it's been great to see profit come through in the past couple of months for these guys.
Yeah, I guess I'd probably add there that it's a pretty close relationship. I know, I can't remember which one it was of NVIDIA or AMD that were working with the Ethereum Foundation. So it's really like with the technology, we've got to the point where crypto is at such the bleeding edge of not only trying to write this software and blockchains to solve problems, but actually the tech side of things. And with Bitcoin, we know that those chips and the ASICs are like, cutting edge stuff. But also with Ethereum, the Ethereum Foundation want to work with these chip providers to make mining as efficient as they can. And then when they move to staking, it's still important that they can make that as efficient and as best as possible. So interesting relationship between hardware and software that I didn't really understand until I got my head around all this different mining stuff. And it doesn't make sense to me. That is, whoever's in charge of that cost price and marketing, they might have cost themselves a job there. There's no point in releasing a new thing at under cost and then letting people that are flipping it on eBay make triple the profit.
Yeah, absolutely. I mean, it's literally that. Like me and Kel, we've been like gamers since early days high school, and we had the one of the 1080 graphics cards, and you could pretty much sell that one for $800 now and get the new one. Like, you're absolutely right. It just didn't make sense, but that's what they decided to do. But yeah, at the end of the day, they don't even have the supply to sell them, and now, as you said, it's just selling on the retail market for ridiculously higher prices. So interesting stuff there. I think everyone's been a bit baffled. There's, as everything happens on Twitter, there's ridiculous memes going around about, what they've done. But at the end of the day, that's their decision. And for people who did grab these graphics cards, they actually can be earning quite a bit on the Ethereum network at the moment.
Yep. Yeah, they do look cool anyway. We'll give them that. So you've got the hash rate there that's going parabolic again, or the difficulty on Ethereum, I should say. But where will it go? So this is something that I've mentioned as possibly like a fundamentals opportunity as well. There's going to be a lot of miners that might kick up a fuss, and we might see the trolls and the maximalists and the news sites start narratives that Ethereum's going to die and all the miners are going to either fork the chain and create Ethereum Classic, or actually move to Ethereum Classic, and they're going to start to try and pump that up and make that look really good because it's in their interest to do that to make more money. So lots of other coins. Will's got this list together here of other coins that are the same algorithm, that those hardwares can be pointed at so they don't go to waste, basically. So I'd be very, very interested to have a look at something like the amount of mentions on Twitter of that list of coins as we go closer to this date.
Yeah, I mean, like the slide before, you can see how much hash rate there is on the Ethereum network, and it is a really substantial amount. And then the second slide with the list of coins, just to make that point again, that Ethereum is literally holding about 98% of the hash rate across all Ethash coins. So as soon as that drops off, these ASIC miners need to find a home somewhere, or they're just going to turn off and collect dust, as we say. And I just don't see how these smaller coins are going to hold that hash rate. So it's going to be interesting. I honestly don't have the answer. One thing I was talking to Cal about is, I feel like there's quite an opportunity out there for if someone wants to release a project that is going to use hash rate, it's like almost free hash power sitting there to just grab. Like people are going to be looking for homes. If you're launching a project on their Ethash algorithm, I mean, you've got a lot of people looking for a home. There are a lot of workers looking for a home there. So, yeah, it'd be interesting to see what happens. I wouldn't be surprised if we start seeing a whole bunch of Ethash coins pop up. But I don't have the answer. Like, it's a really big situation that, yeah, I'm not sure exactly what's going to happen there.
I haven't heard of a lot of these coins, but maybe someone as an experiment might want to throw $10 at each of these and see how it gets affected. But as Will says, there's no point all those miners going to mine ETH Classic because they're just not going to be profitable. And I think it's come at the right time because gaming and that space and NFTs and all that is kind of exploding. So there's lots of graphics cards that maybe people will end up using to go to work in the virtual world on Decentraland rather than mine crypto. So I think we're going to see graphics cards knock out the dust in the world that we're going to live in future.
Yeah, for sure. I mean, they're going to find value one way or another. And I think, the GPU industry, largely has, in terms of mining side, it hasn't been expanded like it was in 2017. It's not like if this happened in 2017, there would have just been like a ridiculous amount of graphics cards. But yeah, we will definitely be covering it when the time comes and really documenting what's going on and how it's affecting prices and the rest of it. But yeah, right now it's a bit of a mind boggle.
Awesome. We have covered that. Next slide. Staking.
Summary.
Yeah, staking to host. Oh, did you have something else to add to the summary at all, Will? Or?
No, that's fine. Yeah, just had it as dot points there. If people want to flick over and just have a look at some of the dot points that we covered, but pretty much, yeah, everything there's covered.
So ETH2. So we've already seen a lot of the big exchanges, like Binance have been doing their staking, and then Kraken have got in there as well. Coinbase. So you're going to see. Probably another important point about Ethereum and DEXs and DeFi is that they've surpassed like Coinbase in terms of the volume that's happening on Uniswap. So these exchanges that were making a killing, even from things like the listing in the IEOs, a lot of that is now happening in these little decentralized communities. So exchanges are going to have to help you with your staking. But again, that's the trade-off. They're the custodian of your coins. And we saw KuCoin get hacked just this week. So it's all a trade-off about education. Some people will want to do that on exchange. Others will want to use services like Rocket Pool or others out there. But we are going to see more of that going forward, I guess, aren't we?
Yeah, absolutely. I mean, everyone's always got their different ways about going about things. Like some people really like to engage on the decentralized side. Some people prefer to be on the centralized side. I think and it's a perfect example with KuCoin, if you are going on the centralized side, you want to know who's behind those exchanges and whether they've got insurance and how everything works. But we've basically, most of our mining store members are using Mine Digital as the fiat on-ramp. And we are looking to be hosting the Ethereum 2.0 nodes on Mine Digital as well. So a lot of them are already keeping their Ethereum in Mine Digital. And there's a slide here with a bit of a wireframe of what it'll look like. And we will be able to actually host the nodes for our members as well. We probably won't be having we won't be able to be taking like 0.5 of Ethereum or something like that. I think if we're going to be splitting up nodes, it would probably be a minimum of like 4 Ethereum to be staked on there. But nevertheless, it would be a service for a lot of the guys that are already holding their Ethereum on Mine Digital as well. So that's just a slide of the wireframe that we've come up with. And yeah, I'm looking forward to that service too.
Yeah, okay. I know Grant fairly well, and I didn't know they were offering staking for these other things. So, I mean, I might have a word to him as well if he's doing that. Because it is good for, I know some people are not going to trust and use MetaMask or whatever. So, yeah, it's good to look after the local exchanges if there's something they're doing that others aren't. So I might look into that as well. But what was I going to say? Oh, yeah, interesting thing you raise about there's even some of these funky new tokens that there's one called like an X token, and what it does is create a token that stakes for you, and that token accrues value and accrues the rewards. So if you can't, it would be called like X ETH, and it does it all for you. And anyway, there's going to be that many different things and.
Oh, it'll be crazy. Yeah. Is that like kind of like a wrapped version? Is it? So it's kind of, you're holding a token which gets the benefits of the rewards as well.
Yeah. It's like a wrapped staking rewards version of the same token. But I think they got slapped on the wrist by the regulators. So we'll see if they can come back from the dead.
Yeah, well, it would be interesting. It's similar to that Ethereum, going 2.0 and all the hash rate. Like it's one of those things that it's going to be a massive event. It's one of those things that I don't think we can predict everything that's going to happen. But yeah, as you said, it's good to support the local guys and people that we can trust and rely on. And a lot of people don't want to be using the MetaMask and they don't trust themselves or whatever it is. So yeah, it's just about on your behalf, Alex, and my behalf, making sure we provide options for people and give the right education.
Yes. Now, I've got the Bitcoin hash rate up and we can see that keeps powering higher. As you said, even if 10 or 20% of miners have dropped off in China, that the new, some of the newer ASICs and whatnot, or just more coming online in other regions, we've still gone to a new high recently.
Yeah, it's crazy, honestly. There's two slides further that will show what the kind of profitability of one of the new miners is at the moment. But whilst we are on this slide, this is something that I like to refer back to this Bitcoin production rate, and that red mark above the price is basically the negative that some of these miners are in when you factor in their hardware costs, when you factor in their electricity costs, their infrastructure costs, labor costs, everything like that. And there's clearly a bit of a disparity. They're not quite making enough to, it's costing them say $18,000 to $19,000 a year to produce one Bitcoin, and Bitcoin's still only at around the $10,000 to $11,000 mark. So there is that disparity. There is that gap between what it's costing them and what Bitcoin's priced at. But then we go and look at network hash rate, and it still just keeps powering up and up and up and up and up. So I honestly think this is a really fundamentally strong point for Bitcoin. It does show that people are looking at it long term. They're willing to mine it still and potentially break even or be at a loss in order to make sure that they are set up on the scale to take advantage of things when things do really, really take off. So yeah, I always refer back to this. It's either one or the other's got to give way. Either price has to rise in my eyes in order to meet the kind of amount of hash rate on the network, or the amount of hash rate on the network needs to drop off in order to make it more sustainable for these miners to stay on. So yeah, it's cool to keep tracking it. I personally feel like price will rise. Talking to some of the larger miners out there, they're absolutely more than confident in what they've got set up, and they're only scaling out further and further and further. So yeah, I've got nothing to believe that Bitcoin won't continue going up based on that.
And I think, was it a couple of minutes ago when I said, well, the pairs trade here would be to go long Bitcoin, which was about in the 8,000s or 9,000s the past couple of months, and you would short the hash rate contract. Now the hash rate contract has gone up about 10%, but Bitcoin would have gone up probably more than 15 or 20%. So that would have been a profitable trade. But yeah, something that we'll definitely keep a look at. And it's just telling you that there's rich people in China that believe Bitcoin's fair value is a lot higher. And that's just a sentiment thing, like in crypto winter, that when it was at $200, $300 for a year or two, that puts a psychological sort of floor and fair value around the price to go up from. So yeah, we all think that Bitcoin's going higher. Otherwise we wouldn't be here.
And there's this interesting thing, like it hasn't been talked about for a while, but it's what we call virgin Bitcoins. And it's Bitcoin that has been mined and never been traded to anyone. It's literally been mined, distributed from the reserve and held by the miners. And there's talk that, these coins could actually trade at a premium because they don't have transactions attached to them. They're literally what you call virgin Bitcoin. So,
Yeah.
it'd be interesting to see in the next 5 or so years, that market, and whether it comes to fruition or people end up going, it doesn't mean anything to me that hasn't been traded, or what happens there. But, it's definitely a point that, some of these bigger miners are definitely holding on to a lot of that, what we call virgin Bitcoin as well.
Yeah, so they can either just be hodling because they believe in it and they don't want to sell at this price, or what the theory I floated was, I think ages ago when everyone was hyped about the Bitcoin ETF, was that regulators might say we need these coins that are straight from the block, and that's actually called the Coinbase. So don't get that confused with Coinbase, the exchange, but coins that are virgin coins that have no transaction history, they can't be involved in money laundering or anything bad. So
Correct.
an ETF might demand that they are the coins that are used, because an ETF can't find out that $1 billion of the coins they've got have now been seized for crime purposes or something like that. So that's all just sort of speculation, but that's the theory behind it.
Yeah, no, exactly right. And yeah, as I say, it just will be interesting to see. Like when I was first told about this, I was actually called by a client, I think it was 2.5 years ago, and he's, desperate to get BTC miners so he can, basically get these virgin Bitcoins. I almost laughed at it. But the more you look into it, as you said, it kind of does make sense that, that doesn't have that transaction. It's got less risk, then, less risk means more value. So yeah, it'll be interesting to see what happens there.
Okay, cool. So let's have a look. This is the summary. I think we've covered all that. S19
Yep.
Pro has just been released.
Yep.
Yeah.
All covered then. Yeah, so just the final point on the S19 Pros, they started being released 2 weeks ago. So where the network hash rate is now, by no means have all of the S19 Pros been released onto the market just yet. They're still releasing, like it's going out in flows. The retail price, if you go onto Bitmain's website, the retail price is $2,450 for one of those S19 Pros, but the actual price that's being traded, similar to what we're talking about with a graphics card, people can't actually get them at that price. They're actually being traded closer to about the $4,000 mark, US dollar mark. So yeah, I mean, they're still going to be released out. I think next month when we come and look at the network hash rate, there's a good chance that it's going to even be higher.
Fantastic. Another little prediction there. Will, you can take the other side of that trade then. You can go long the hash rate.
We'll sit on it together.
Okay, so profit per day, that ratio, that's not the same as an APY figure. All you yield farmers that are thinking, oh, 100% per day, that sounds all right.
Completely different, yeah. So that's basically what we have here is a snapshot of if you were hashing at 113 terahashes, which is what the new FBTC miner is, the S19 Pro, and the power consumption that they're using is sitting in there as well, 3,250 watts, and the cost is the cheapest electrical rate that we at Mining Store can get, which is 5 cents, but only for ASIC miners. It's a bit different for FPGA miners. And so based on those calculations at the moment, you're averaging about $4 profit per day in US dollars, which would get you $1,400 to $1,500 US dollars in the year. So, I mean, the cheapest that you're probably going to get miners as like a small purchaser, as I said, is around the 4,000. Obviously, if you're buying, 1,000 of these miners, you're probably going to get it closer to that price that Bitmain are offering at 2,450. But even then, you're still a little bit off getting the return on investment in 1 year. So, I would like to, if I was getting into, heavier into the ASIC BTC mining, I would probably want it to be pretty close to 1 year. So really what they're relying on is Bitcoin's price, coming up quite a bit. So, I mean, it's great to see that they are profitable. But yeah, I do just think that, again, it's that an argument for Bitcoin's price should obviously appreciate, or the hash rate needs to come off a bit.
Fantastic. Well, I think that's everything today, guys. I hope you've enjoyed that episode. I mean, there is just never been a more interesting time in global markets. It's like all this yield farming and crazy vegetables happening, and then you've got the presidential election, and then you've got the finance, global hedge funds waiting to see if we print another few $1 trillion, and negative interest rates in Europe, and central banks buying gold. I mean, what a time to be alive.
Yeah, it's everything at once, isn't it? I think, could be a revolution. Something's got to happen.
Good time to hang out in Tassie. You might have to come down here, Will.
Yeah, I think so.
For people that have stayed to the end, there's a little mining. Well, I shouldn't say a little. I know for a fact. Sorry, after the other day, I've joined all the dots. There's 100. Is it megawatt Bitcoin farm, like biggest in Australia, that's setting up down here in Tassie?
Yeah, absolutely. I'm aware of it. But yeah, you guys have got really good hydroelectricity in Tassie. So it makes sense to set up there. But it's cool to see that kind of happening. There's not really too big a mining operations in Australia. We obviously have some facilities in Australia, but a lot of it is overseas. But yeah, personally at Mining Soul, we've had meetings with some of the bigger players in Tassie, and it's good to see them adopt it.
I'm going to go check it out. So there might be an episode of mining, monthly mining on the road, and we'll go check that out. But that's it for today, guys. We'll see you next month. I'll put the links to follow and check out Will's stuff down below and the discount for you miners out there, and we'll see you next month.
Great stuff, Alex.
Cheers, guys.
Cheers.